Did Bitcoin see its shadow on Groundhog's Day and predict 6 more weeks of crypto winter? Hey everyone, and welcome to February Volatility for Crypto. I'm Jenny Horne, and you're watching Crypto Corner on Schwab Network. Let's get right to it. Joining us to discuss the dramatic move lower, Adam Lynch, Director, Equity Modeling at Schwab Center for Financial Research. So to kick it off with big news, of course, impacting the Fed, President Trump nominating Kevin Warsh to replace Jerome Powell. Really, what does this mean for the broader crypto world?
That's a great question, Jenny, and one I think that the industry seems to be wrestling with a bit the past week. As you mentioned, last week, President Trump nominated Kevin Warsh, a former member of the Federal Reserve Board of Governors, to be the chairman after Jerome Powell's term ends in May. This was seen as a bit of a surprise after BlackRock's Rick Rieder seemed to be the favorite early in the year. Warsh had previously served in the Fed under Ben Bernanke back in 2006 to 2011. And he's credited with being essentially Bernanke's right hand man during the midst of the great financial crisis. What it means for crypto, at least in the near term, I think depends on which Kevin Warsh shows up at the job. He's long been considered a hawk, believing higher interest rates essentially help price stability. But as he's campaigned for the job over the past few months, his comments about inflation have been a little bit more dovish in the past. Doves are more concerned with promoting economic growth via expansion, even at the risk of higher inflation. Some economists, like Robin Brooks at the Brookings Institute, predict that he will aggressively cut interest rates, going against his hawkish nature. Brooks predicts about 100 basis points of cuts over the first 4 meetings following Warsh's appointment. He claimed that many came away from last week with a mistaken impression that Warsh will be hawkish. Essentially, Brooks stated that he can't be and he won't be because his worst nightmare is probably to have Trump on him the way he was on Powell. Aggressive rate cuts like Brooks predicts could help revive a bull run in Bitcoin and the wider crypto industry. But how likely is it that he tries to cut those rates so aggressively? That's where things get a little messy. Right now, there are even questions about the Fed's independence and whether Jerome Powell will remain as a Fed governor for the next couple of years. That could have an impact on interest rate policies. And what does the market tell us? Well, it seems to disagree with the likelihood of such rapid cuts, at least initially. Bitcoin fell down to $75,000 over the weekend, down about 9% from last Thursday, with these hawkish fears fueling risk aversion. There are even some concerns about the timing of Warsh's confirmation, given that Senator Tom Tillis, Republican on the Senate Banking Committee, has stated that he will oppose any nomination until the Fed's investigation into Jerome Powell is resolved. However, most expect that story to slowly disappear between now and May and for Warsh's confirmation to go through smoothly.
So let's take a look at the Bitcoin chart. What really sticks out to you given some of the turbulence we've seen from a macro and Fed perspective?
Yeah, there's really no denying it. It's been a tough couple of months for crypto investors. When we look at the Bitcoin chart, I think it's important to zoom out a bit and separate the past year or so of performance into 3 different time periods to try and understand what's going on. So Bitcoin's trading around 75,000 today, down from its all-time high of 126K or so set back in early October. Since then, the currency is down by over 40%. And it's also worth noting that it's trading well below its 50-day and 100-day moving averages. But if we look back a bit further to early April and Liberation Day, Bitcoin's essentially round tripped. We've started back at 75,000, ran up to 126K, and then dropped back down. During that 9 month period, there were a lot of positive catalysts for Bitcoin. We had new ETP product launches, bringing crypto deeper into the retail world. There were crypto based IPOs, new token launches, and the momentum of the crypto president. And more importantly, for full institutional adoption of Bitcoin, there was progress being made on crypto industry regulation. Unfortunately, a lot of that excitement has faltered as the legislation has stalled. The start of 26 wasn't bad for Bitcoin as it started the year around 88K before reaching 95,000 or so. But since then, it started its most recent dip in mid January and is down over 20% since. But it isn't all doom and gloom. And for those long term investors, let's just have a little bit of perspective. Bitcoin started 2023 priced at about $16,500. It began 2024 at about 42,500. So if you've been holding for years, you're probably pretty happy with performance. Now, I mentioned earlier that Bitcoin dropped 40% since October. Bitcoin's historical volatility has been about 3 to 4 times that of the stock market. So if you can reasonably expect a 10 to 15% equity market correction in any given year, and you can, that a 40% drop in Bitcoin is just as reasonable. Unfortunately, the new 2025 class of crypto investors, mostly retail investors and traders who may not be aware of this background, have not had a good investing experience so far. And hopefully for everybody, that will turn around in 2026.
So, meanwhile, we know crypto related asset classes and crypto treasuries like Galaxy Digital and Strategy have also been feeling the brunt of this Bitcoin selling. What are you watching in this group with some of these equities that are, frankly, very exposed to these pricing pressures?
Yeah, they're a very interesting group of companies, aren't they? I've mentioned this before, but here at Schwab, we've got an equity rating model, the Schwab equity rating, which has been around for over 20 years. But boy, does that struggle to rate stocks like this. Whenever there are new companies operating in new industries like this, investors should probably expect above average volatility from them. So seeing them down more than the market, while not ideal, is not necessarily something to panic about. But let's take a closer look. Galaxy Digital reported a much wider fourth quarter loss than expected, losing $482 million, which was well above the analyst expectations of $282 million. CEO Mike Novogratz said that falling digital asset prices obviously weighed heavily on their results. And this announcement caused their shares to drop about 15%. Despite the loss, Novogratz has said he remains constructive on the market and argued crypto may have bottomed out. Selling pressure from long term holders has eased recently, and he said that periods of maximum pessimism often precede rapid reversals and could open the door to potential accumulation opportunities. So, strategy, on the other hand, is a bit of a different animal. It's been in a steady downturn after hitting a high of about $450 per share back in mid July. The stock was trading around 350 when the early October volatility hit the market and is down 60% since, trading at about $128 or so today. Strategy did disclose on Monday that it bought 855 Bitcoin last week at a price of $88,000 or so, bringing their total holdings to 713,000 Bitcoin at an average price of about 76K, which means that at today's price of 74, 75,000, they're underwater. However, the move doesn't have any immediate consequences, with only a fraction of Strategy's debt set to mature in 2027. And then they've also stated that they have over 30 months of dividend coverage. So I don't think there's any near term concerns or anything here. But one of the most bullish sell side analysts when it comes to Strategy, Canaccord's Joseph Vaffy, today cut his price target a whopping 61%, from $475 a share to $185, while maintaining a buy rating. Strategy's down about 15% year to date, 62% year over year, and 72% from its record high back in November of 2024. Vaffy sees Bitcoin amid an identity crisis, still somewhat fitting the profile of a long term store of value, but increasingly trading like a risk asset in the short term. Strategies built to weather this type of volatility, Vaffy's report said. Quarterly results from them come later this week, but have become largely immaterial given Strategy's near complete dependence on the price of Bitcoin. Vaffy's new $185 price target assumes a 20% rebound in Bitcoin's prices. So, for the market's sake, let's hope he's right.
Absolutely. And thank you so much, Adam Lynch, for all that insight into the broader crypto world. That'll do it for this week's edition of Crypto Corner. Need more crypto content? Be sure to subscribe to our YouTube channel and tune in as we're streaming live every single market day. I'm Jenny Horne. Thanks for stopping by.